Welcome back to The Exchange. The consumer is still strong, according to recent data, but results from discretionary names across travel, retail, restaurants have shown some signs of slowing spending. And the REIT Tanger has a bird's eye view across all three, with 3,000 plus stores across 40 shopping centers in the U.S. and Canada. Last quarter, net operating income jumped 8%, stronger retailer demand and higher rental revenues. Joining us now is Tanger Outlet CEO Stephen Yalof. Stephen, welcome. Good to have you with us.
Thanks for having me.
You are doing well, I think, probably in part because you fit in with the idea of a value-oriented consumer.
I think that's a big part of the story. There's also just a lack of new retail that's coming onto the marketplace. And there's a high-end retailer demand right now.
A few years ago, a lot of people were saying stores were dead. Nobody was going to go to stores because of health concerns, because of online shopping. But people like going to stores.
Well, I think COVID completely changed the narrative. I think people are looking for more to do when they go to a shopping center than just shopping. They're looking for better food. They're looking for more experience. They're looking for other things to do. And so that's been a huge strategy for us, is to take what was typical power shopping outlet centers and evolve them.
So what's come in to affect that change? In other words, the Tanger outlet that I go to, we were talking just a moment ago out in Riverhead, Long Island, I think of it mostly as a shopping destination. I don't think of it as an experience destination or an eating destination. Who's come in as some may have gone out?
So Riverhead is just one example of 40 centers that we have across the country. We have shopping centers in other beach communities like Myrtle Beach and Hilton Head. Now, first of all, the first dynamic that we're seeing is permanent population is moving that way. You know, I think COVID has had more people working from home, so people have moved out into the suburbs. And that suburban transformation to our geographies has caused for our centers to be gathering places, not just on the weekends as outlet centers have been in the past, but really during the week as well. And that's what's feeding the better food and beverage users.
So what food and beverage companies are coming in? Is it a Cava? Is it a Chili's? What is it?
Well, that's right. So we've added Cava to one of our shopping centers, and we're working with them on several others. Shake Shack has joined us in a number of our shopping centers. We have a couple of Dallas barbecues and stores like that have sports bars, sit-down restaurants, food and beverage. The beverage piece is really important, too.
Yeah. I would think after a long day of shopping, you need a nice beverage to take the edge off a little bit. So what are you seeing in terms of foot traffic as we head into the fall and into the heavy shopping season?
Well, you know, I think that the narrative of the consumer going to value, more value-type product, I don't think our consumer isn't really shopping for low-end product. What they're shopping for is the best possible deals on the brands that they love. And they can get them in the outlets every day. So we've seen a bump in our traffic, particularly in August. I think a lot of it has to do with back-to-school shopping. Back-to-school shopping starts very early, and we're across the country. So you have some schools starting as early as the beginning of August, and now others going back to school right now. So it's been August has been a great month for us.
I asked you in the break, where do the retailers source their merchandise? What is it? If I go into a polo outlet at one of your places, or into a shoe outlet, I don't know who it would be.
Let's talk about Nike. Nike's a great example of a brand that only sells excess inventory in their outlet stores. That's it. So they're not manufacturing anything. You know, that's part of the narrative is, everything is being manufactured.
It's a cheaper version, blah, blah, blah.
Yeah, you know, I think that every brand in outlet uses outlet for distribution in a completely different way. You've got brands like Lululemon that only sells excess inventory, and Nike only selling excess inventory. You have brands like Ralph Lauren that may make some lines for their outlet because they don't want to disappoint a customer. So a customer is going in, it's not fun to shop in a store when your runs are broken and you only have size 2s and size 14s. You want to make sure that you're filling in the lines in between. But they're also, what they're doing is they're taking excess piece goods. So they have inventory of fabric that they're cutting up using their best styles, putting them in a new fabrication and putting them in the stores, and they sell through.
What is the likelihood of lower interest rates going to mean to you, your business, financing, et cetera?
Well, I think, first of all, from the consumer perspective, I think it puts more money back in the hands of the consumer, which is always good for for us in the shopping business, but also for us as we're a growth company. We've got a great balance sheet. So it gives us better access to capital and the ability to borrow at much lower numbers as we're going on. We in the fourth quarter of last year, we bought 2 and built 1 new center. And we have our eye on a number of new acquisitions that we're hoping to share with you in the coming months and quarters.
We hope you'll come back and do that.
Thank you.
Stephen Yalof, thank you very much.